Hi there, traders. This is Brad Gilbert with the FX Market Insight for Tuesday, the 7th of April. All right, now as we come into today's trading, just having a quick look at the major news here. Now, there's some major things happening with the central banks. They're talking about, well, some of the articles here saying seismic stimulus shift. It's pretty epic. Okay, you get into this. They're talking about, just basically providing cash until the cows come home. Right, the whole situation is basically changing. They're talking about, wiping out debt, just continually funding, coordination between the governments. Basically, this is going to be, to me, I liken it to a game of Monopoly where the banker is so happy to keep playing, they keep giving everyone money, even though everyone's got no money and they're completely out of the game. Right, so what we've seen is this is like. Unfounded. It hasn't been done before. Probably puts the world in a continuous debt cycle forever. There won't be, in this situation, there won't be interest rates I can't see going forward. They'll have to restructure the financial system because it's a complete shift of debt ownership, which has been hanging around since 08, 09. And now we're seeing some really weird situations. Now, with that, as I said, to me, that means we're not going to have probably interest rates anymore. So equity markets, they're rallied up 7.73%, right? Because they've basically just opened the door to companies, to everything, right? Get as much as you like, help yourself until the cows come home. So what's that doing for the currencies? Well, I think everyone's a little bit confused on the risk on, risk off profiles. You think with that that seismic shift in the central banks, that you would see a lot of the currencies go through the roof. Well, we are starting to see a little bit of a shift in some of the pairs, but there hasn't been a hell of a lot of movement. What it's done is it's stabilized a bit of volatility around the place. Gold sitting up around $1,600, 1,666. You look at the correlation matrix, trying to work out what's moving with, say, the equity markets. So the Dow, you got Aussie yen, Kiwi yen, generally the yen crosses. Then you've got Aussie, Kiwi, and CAD yen, and inverse relationship there with dollar CAD. So to me, I'm just a little bit blown away with the whole, what are they trying to achieve? This is like just, it's such a game changer. I just don't know what to sort of think of it at this point. Now, so we should see equity markets go up. Basically, they've just said, whatever happens, we're going to just keep printing money and just keep giving it to you. And if your debts get too big, we're just going to wipe those out for you, right? That's the picture I'm getting. So to me, if you haven't already got a $5 million house, try and go and get one, because you might be lucky enough to have that, if you can't pay it back, that debt wiped out somewhere. All right. Now, that may be a slight exaggeration, but I'm just a little bit miffed as to how they can just kick this thing down the can down the road. It doesn't make a hell of a lot of sense to have a financial system that has no recourse for debt. Now, so the pairs, Aussie yen, Aussie and Kiwi, right? If anything, they've held their ground, slightly gone up a touch just through these short-term resistance lines. Now, this is the risk, some of the risk-on pairs. Dollar yen, well, it's a little bit brain dead like myself. Okay, trying to work out what this all means. It's like, okay, right, this is different. Euro is steadily, happily going about its way, not really getting close enough to that sort of resistance line to really get into the thing, which is a bit frustrating. Boris, well, he's in intensive care, so sterling took a little bit of a nosedive, but it's pretty hard to work out what's going on there. And dollar CAD just flirting with the support line here. It's a little bit miffed as to what the hell is going on as well. So as you can tell from my tone, it's a little bit. I'm a little bit confused. Technically, the major pairs are still trading quite well. Okay, where the confusion's coming from is the market driver. Obviously, this coronavirus is the biggest thing ever. But with all the central bank activity here, and they've cut rates. So basically, we're at a situation where everyone's cut rates to zero. We do have the RBA coming out today. You got to expect these guys to go to zero. Come on, they've got to get involved and then roll out the never-ending golden handshake. So I don't know if anyone's going to be paying back anything at this point. But to me, the pairs that are still active, right? Euro, Aussie, and Kiwi. These pairs are still, to me, set up to go down. I think the US dollar with this rollout has got to be the biggest beneficiary, right? The US, the least reliant on exports than any other country. They can get through this without anyone else. Whereas Europe, Australia, New Zealand, China, everyone else relies on the US, right? That's why the US is going to go through the roof. Now, I added a nice little extra little touch here. So when I'm looking at these active pairs and where to get into the pairs, I've got the best level sort of, it's probably a little bit hard to see, highlighted in green. To me, Euro is a good sell on rallies, whereas Aussie and Kiwi, with that slightly bit of upward momentum, I'm looking for a breakdown through support on these pairs, right? So that's the way I'm sort of looking at those active pairs. Of course, there are other levels there to keep an eye on, but to me, that's where the action is going to be. The other pairs, bit of a watch list. Well, dollar Swiss is still slowly going up, but it seems to be running out of steam. So I'm reluctant to say, get long dollar Swiss when it looks a little bit tired. The other pairs, don't really get me overly excited about what's going on. I just don't feel like I can see what's going on. Now, what are we looking at now? So this is where the fundamentals and the change in the fundamentals is quite interesting, right? So we've got the obviously the RBA coming out today. They've done their best to try and keep up with the Fed and everyone else. They don't have the coffers like the Fed do, but we'll see what they can come up with. Get the minutes of the Fed meeting. I tell you what, that's probably not going to mean anything because they've already come out and said everything they need to. And then you got Kuroda speaking there as well. So these events, to me, are not really going to be doing much. There's a chance for the RBA to cut. Aussie goes up a little bit, then starts to come off again. That's all I can see happening there. And that's over the next couple of days. And then, we've got some, to me, the real big number was the jobless numbers, right, on the 9th. But we've got a few days to wait to get there for that. So that's where we are, guys. It's a little bit of a mixed one, right? So you look at the dollar index here, okay, just trading sideways. I mean, with the level of activity there on the equity markets, there's a mismatch here. Okay, the equity markets have moved. It's like an artificial movement on what the Fed and these other central banks are talking about, but it hasn't really filtered through to the rest of the market, which is where I'm getting a little bit confused on what the hell is going on. So just having a look here at the general news and see what's out there. I mean, obviously it's all sort of propaganda at this stage. Boris hitting the ICU, who cares? So then you got the Bank of Japan, I think the ECB and the Fed coming out with all these massive, plans to just keep buying all the debt until we get back in the groove. I don't know how that's going to work, but we'll see how that plays out. Maybe they'll just buy all the debt, okay, off everyone, and then reset everyone back to zero. It looks like that might be the plan. All right, so that's where we are there on that front. As I said, I'm a little bit confused. I think we need to hear and see more information about this. It could create a situation where people who are caught in debt situations just basically throw their arms up and say, you know what, I'm not paying anything back. And you get a run like that, then no one's paying anything back. And that's the problem I can see with this next level of seismic shift in stimulation, as they're calling it. All right, that's where we are, guys. It's a little bit confusing in the sense of what the central banks are doing. We need to get a bit of a clearer plan there. As I said, just focus on the pairs that have good direction, right? That's all you can do at this point is focus on where you can see the activity, right? And to me, these Aussie and Kiwi should be going down. Euro is going down. Sterling, well, it's been in a big bit of a mixed bag the last 2 years with Brexit. Now we've got this going on, and dollar CAD caught between dollar strength and weakness. The oil has rallied off $20, which is probably a saving grace for a lot of the refineries. It looks like it's found fair value, and dollar yen, well, it's just sitting up here around 109, minding its own business. Could head up towards 111.80, or it could head down back below 107. That's the big question mark. So all in all, guys, it's interesting. I'd like to see more information, as I said, about the central banks, and then we could hopefully piece something together and work out what's going on from there. All right, guys, have a good one. Cheerio.